This episode is brought to you by Bird, a Binance Incubator Labs participant. Bird is on the cusp of releasing their most anticipated product yet. Showcased at the Binance Labs Demo Day, it's called the Customized Investor Launchpad Score. Bird harnesses the power of predictive analytics to push the Web3 user experience to new heights. Visit bird.money to learn more about machine learning and ethically mined user data via decentralized oracles and APIs. Link in the description below.
This my two Satoshis. Who need 2 cents when they can get double from stacking Toshis? Yeah.
What's going on, people? Welcome to My Two Satoshis, hosted by John Hill, better known on the channel as Default. Today I'm going to come to you with a video explaining why I'm bearish on cryptocurrency market. I'm going to get into it, starting off with the weekly time frame. As you can see, we had our high back in April and another high in November. Got these trend lines because on the daily time frame, you had bearish patterns, you had bearish rising wedges that formed. But what I look for looking at this chart is, at first I'm looking for, what type of trend are we in? Are we in a, bullish trend, an uptrend? Are we in a bearish trend, a downtrend? Or are we just like consolidating? And currently you can see the price is pretty much going sideways. So we're consolidating. And with that consolidation, if you look from your high in April to your high in November, there's a few indicators I would like to use to determine if we have a potential trend change. We were in such a bullish trend most of 2020 and about half of 2021. Is this trend going to continue to the upside after this consolidation, or is it more likely to go to the downside, break down from these supports? And so the two indicators I like to use the most, and it's funny because this is why I have my name Default on the channel, is because I just use the MACD and RSI. And why I use that is because I use it to gauge how much momentum each impulse is having. Now, if you have, an impulse up, as you did from, I believe it's from October of 2020 until the summer, basically of May of 2021. And then you had your second impulse from July of 2021 until November 2021. You can gauge how much momentum was gained by using the MACD. And you can see here on the left, when you made your first high, there was a lot more momentum on the MACD than in your second high. And you see your RSI. Every time you made a new high, this was actually your April high, your peaks on your RSI was actually lower. So what this was indicating to me was you were losing momentum. You were losing your bullish momentum. And so what is called bearish divergence. So with that being signaled, and on your lower time scales, back to your November high, again, you made a high in October and you made a newer high in November. And again, on your MACD and RSI, you're both having lower amounts of momentum, which is again, bearish divergence. So you were printing on your weekly time frame and your daily time frame, bearish divergence. You were in a bearish pattern is another thing I look for. I look for patterns, traditional technical analysis patterns, like your wedges, your triangles, your channels. There's a multitude of patterns that, within a trend could give you a advantage, whether you're going to keep accelerating price or decelerating. And so you had a rising wedge, which is typically a bearish pattern, with bearish divergence on the daily, which bearish divergence on the weekly. I tweeted out, I believe it's on the 15th of November, that, if we weren't able to maintain the price within this pattern, there could be a prolonged downtrend starting. And as you see, from November to about early January or mid-January, there was a significant downtrend. Now, you broke out of that early this month, but it's actually back testing this channel that I had that, we broke out of. Going back to the weekly, what was also important and why I'm so bearish on this asset is simply, after we made our low back in July, we rallied and you sold off and you pivoted in September. And after you pivoted, you rallied up again, creating that bearish divergence on the weekly. But this area was significant to me because the fact that we did pivot here and start rallying again, this became support. And it was important for, if we ever tested this area again, for us to bounce off it or just maintain prices above this price point. And what happened in early January was we actually broke through this support. And once we broke through the support, we tested it, sold off, and the last 2 weeks, we were actually above the support. You could see that the price, you didn't maintain prices above this area. So this support now became resistance. And you see we tested it 2 weeks ago, actually closed below it. We tested it again, try to break above that area. And now we're starting to accelerate to the, to the downside. So all this is indicating to me that there's not enough buyers to maintain this price to keep going up. Seeing that, and we have this consolidation really for the last year, you can start to tell that it's obvious that we're losing momentum. We're consolidating, but we have bearish signals. And currently, if you look at this structure, you're actually forming it's called a double top, where you get a high and you can either get a slightly lower high or a slightly higher high. And then you create a net line, which is your support. And once you break that support, you get a measure to move from its high to the support, which is a 54% move. And you could see measuring that move where your target would be. And this is, to keep it simple, this is really how I look for any type of setup, any type of potential trade. I try to find a trend, trying to determine where supporting and resistance is, try to see if there's any patterns. Should we have a bearish pattern? See if there's any divergence, which we do have divergence, but it's bearish divergence that is playing out. And I get the measurement of that pattern and use my fibs for also the Fibonacci retracements to see just where potential areas to long. Your last swing low is the COVID crash. And so you can just use your Fibonacci tool from your low to your high in November. A lot of lines on here. Let me just hide this real quick to see potential areas where you could actually long. If this pattern plays out, the target is around 14K. That's not using, that's the measurement of not using the wicks. If you use the wicks, the target is around 12K. Typically try to stay conservative with my targets. It's still around like 13K at this support. Like I said, I try to stay conservative with my targets because you can always break below your trend line and then make some bullish divergence on maybe a smaller time frame and pivot it and run again to the upside. Anything's possible in this market. As you can see, ran up from 9,000 to 65K, but that's really where my target is. That's how I determine whether the long or the short. I really just try to keep this simple, this video simple and show you what I'm seeing. And vice versa, when the market was actually consolidating bullishly back from the end of 17 to the end of 2020, you made after your impulse up, you bullishly consolidated into a symmetric triangle. You broke out of that triangle, you back tested it, and you ran it, and you actually made your measure move, which was around 69K. And so this is another reason why I'm not as bullish as most people in crypto. You could see these patterns. This is used on the weekly time frame. These patterns are very reliable on a larger time frame, and they tend to play out. It will take time. I'm not saying it's going to be 14K by the end of March or anything like that, which is, anything's possible, but it just seems overwhelmingly like the momentum has shifted bearishly, just looking at the technicals. And then when you look at fundamentally what the Fed is doing, reversing their fiscal policy with tightening, with rising interest rates and tightening QE, it just, the narrative, from the printical burr and, inflation. And now we're in a situation where Fed is actually trying to curtail inflation. So not just technically, but fundamentally, you're in a different environment. I just see within the next coming weeks, we're probably going to be testing this 29 to 30K area soon. And if we break below that, then you got your measure moves is probably around 40K at this support. And you could see that we never really, we broke out of this pattern and we just shot up. We never really tested the support. I know a lot of people are going to talk about main support they're probably going to focus on is the 20K area, because that was the former all-time high. But when you look at the chart, it is support, technically a psychological support, but there's not a lot of other than hitting it the first time, and there's not really a lot of support here. And so that's why with everything I've explained and showing you how I see using traditional technical analysis, this is why I believe we're probably going to test this area around 14K. There's way more support down here. it wouldn't shock me. If you've been in crypto, you know that most bull markets, after you're done with the bull market, you have 80 to 90% retracement. Using your fibs, you can go back in history from the last bull and bear markets, from this bear market back in 2015 to your bull in December 2017. You lost around like almost, over 80% of your value. So it wouldn't be, shocking from your low in 2018 to your high in November 2021 to even get back in it, like I said, lose another like between 80 and 90%. And again, that's like smack in the middle of your measured move target is. And, that's what I'm seeing within the crypto market. This is, the tools I use, just the default settings of the MACD and RSI. And it's when you use all the tools and understand, like I said, the trend, determine where your support and resistance is at, seeing if, if any patterns are formed, seeing, what your indicators, is there any divergence, bullish or bearish, and then, using your fibs for targets. It could be a great advantage other than what most people come into the space with their, their emotions, not understanding like there's a lot of money being traded. And there's a lot of people that are using not this traditional technical analysis, but are using like algos and other, methods to gain an advantage over you that is mostly using your emotion in the market. There will be more videos in the future. Now, analyze this market, analyze any, I mean, you could use this for any market, whether it's, commodities, stocks, currency pairs, crypto, whatever. So hopefully you learned something from this video. Until next time, peace.